Richard, Deutsche Bank effectively came out very late last night with a pseudo-profit warning, I guess you could call it, saying that they're going to be on the light side of estimates in terms of profits and so on, but also that they were intending to de-risk their balance sheet up to 100 billion of risk-weighted assets. What's going on there? What's the reason for this?
Okay, there's a German mechanical requirement here, which is simply that when your consensus and your actual profits are going to vary by more than 5%, you have to come out.
So they had to come to the market.
They had to come to the market with something. Bad timing, they used to do it just after just before the market closes. This is something that we should really have seen coming in some ways, because we've seen investment banking reports come through and they're all showing pretty grim results out there. But this, I think, is also extending across the Deutsche franchise.
It's more than just investment banking.
Yeah, it's not. I mean, they're a powerhouse in investment banking and probably Europe's only credible investment bank. So I think they're going to be, revenues actually are only down, what, 8 billion, I think, for the quarter from 8.5 a year ago. So that looks okay. But the thing we're dealing with here is probably a slowdown in Germany to some extent, and on their retail franchise, and also their up for sale asset management and wealth management unit.
And we know the weak euro has hurt their dollar-denominated costs, which is a slight problem. Do you think these risk mitigation measures are going to get them where they need to be capital-wise?
Well, the bank has always slightly had a finger in the dam, hoping that it won't need to do a capital raise, and obviously it'd be incredibly dilutive. We've just seen how Credit Suisse rather desperately had to place some convertibles with its friends in the Gulf and in Singapore. That'll be 20% dilution next year, so there's a time bomb there. That's what Anshu Jain and Jürgen Fitchen want to avoid. The thing is that it's going to be quite hard to keep shrinking assets. They've got to get rid of 105 billion of risk-weighted assets by the end of this year to reach this Basel 7.2 target. It's tough to get rid of stuff.
So they may actually have to raise new equity as well. There's a chance at least.
Well, they can sell. They're trying to sell their asset management business. These things don't happen in a matter of days. It takes months and months and months. So that might move the needle on the dial just a little bit.
And just final question. We also heard today that Sandy Weil was backtracking a bit and saying that he'd split asset management, investment banking from core banking. Is that something you think is possible for Deutsche?
Yes, I know we've recommended, for example, that Barclays has 2 co-CEOs as a way of sorting out things with regulators and so on. Deutsche's got 2 CEOs already, and curiously there's a feeling that one might just nicely sit at the head of an independent, separately listed investment
So you don't
bank.
even have to choose your you don't have to choose your heads of those divisions. All right, nice idea. Thanks very much, Richard.